Hi, and welcome to this week's Stockscores Market Minutes. I'm on vacation in Rome, so not my usual setup here, but we can talk one of the hottest stocks of the week, and that was Tesla. It's really been moving up quite nicely over the past couple of weeks, started maybe 8 or 9 days ago. Let's take a look at the chart and just see what's been going on here. You can see it was, in around that 180 level just a couple of weeks ago, and is now sitting at 250, so big gains. So let's talk about whether it should be bought, and in doing so I'm going to teach you some important lessons about when to buy, when to sell, when not to buy, and give you some answers to that question on whether Tesla should be bought here. So the first thing I want to point out is there's, in my mind, two ways to buy a stock. One is buy when there's a break from a low volatility trading range, ideally from optimism. So let's start with that. If we look here at the chart of Tesla, we can see that there's optimism when there are rising bottoms building on the chart. Okay, and we've talked about this before in past videos, but anytime you see the bottoms rising, what it really means is that investors, the buyers are getting stronger over time and the sellers are getting weaker. And then when you break from low volatility, that's a clue or a cue to buy. Now, what do I mean by low volatility? Well, if I draw a line across these bottoms and a line across the tops, you can see that those lines are converging towards one another. What that means is that in every price swing up and down, they're getting less and less intense with much less movement. And that basically means that buyers and sellers are coming to some agreement about what the stock is worth. So just before this breakout here, you can see there was very little price volatility, whereas over here there was a lot of price volatility. So this is uncertainty and this is confidence. So there's confidence in price here and uncertainty in price here. That's why you've got lots of volatility. So when you break from low volatility, it implies that there is some new information, some new motivation for buyers to act. And since we understand that the stock market isn't fair, that some people get better information than others, we sort of can say then if a stock breaks from low volatility with an abnormal price gain, it's typically caused by some buyers coming in aggressively because they have some new information that justifies paying a higher price, and that, as more and more people learn about that information, will push the stock up in price. And that's exactly what's happened on Tesla. Now, I don't read news about companies, I just follow market action. I'm not really a technical trader in the sense that I don't really rely on indicators. I'm just looking at market action to see who's winning the war. Are the buyers winning? Are the sellers winning? Are the buyers giving us a clue that they know something about the company's fundamentals that justifies paying a higher price? And so when you see this break here, it's because investors are buying aggressively, and it's usually the ones that know the most. Now, later in the week, we find out that Tesla sold more cars than was expected by analysts, and that's one of the reasons the stock has done well. All right, so that's number one. So that's when we want to buy, one type of buying. The second type is once a stock is in an upward trend, we don't want to chase strength. We want to wait for pullbacks and buy the breaks of pullbacks. Now that'll become important when we dive into the shorter term chart. So let's do that now. I'm going to switch this to a 1 month, 60-minute chart. And now you can see that original breakout, which was back here, and the stock had rising bottoms, so that was optimism. So it's breaking from what's called an ascending triangle. And then along the way, we go up, we pull back, and we break. So that would be a second buying point. Since then, however, there really haven't been any pullbacks. The stock's just been going quickly and steadily higher. And this is where the problem lies, because you have a market that is become rather emotional. People chasing the stock higher. The stock was at $180, now it's at over $250, and that's in just over a little over a week. And so it's really gone up too fast, and there's now too much motivation for people to take profits. If you bought it at 200 4 days ago, the first sign of weakness, you're going to jump ship, because that's just human psychology, right? You don't want a winner to turn into a loser. You want to lock in that gain. So anytime a trend goes parabolic, we've talked about this with NVIDIA in recent weeks here, anytime a trend goes parabolic, it's ripe for a pullback. And that's why I do not think you should buy Tesla now, but perhaps in the near term. And here's what you want to do. So if I draw a linear trend line, I can draw a line across these bottoms, and that's roughly the linear trend. We've run away from it, and so we should soon pull back to it. And it's that pullback that will create the next opportunity to buy. Because if we pull back somewhere near the trend line and then bounce off of it, that is a time to buy. If you are long of Tesla right now, then you want to be watching for a sell signal, and that simply would be a break of this very steep upward trend. So if it breaks that steep upward trend, and I'm watching again a very short-term chart, because the stock's moving quickly, so this is an hourly chart. If that breaks the upward trend, then expect that it's going to pull back down to the trend line. It can go back to the trend line by coming down. It could also go back to it by going sideways for a while, and just takes longer if it's going sideways. So the strategy then on Tesla is this. If you're in it, stay in it, but watch for exit signals very closely, because it could turn very quickly as profit taking sets in. If you are not in the stock and you want to be, wait for a pullback, wait for it to come back to its trend line, and then bounce off of the trend line, and that's your opportunity to buy. And that could be somewhere in the $230 level instead of paying $250, $252. Let it come back. Maybe it's going to keep going. It could go to $270, $280, and if that happens, you just let it go. If you're in the stock, you ride it until the upward trend is broken. All right, so that's a little insight on Tesla, but also a broader education on when to buy stocks and when to sell them and when to wait for those pullbacks. Now, let's do our normal market analysis. Let's take a look at the S&P 500. And this is the weekly chart of the S&P. And you can see that the trend is still up, so it's a bullish trend. But keep in mind that this chart is really dominated by the largest companies in the S&P. Nvidia, Tesla, Google, Amazon, Microsoft. Those stocks are what are driving this market higher. If we go to the equal weighted version of the S&P 500, which is RSP, same 500 companies, but look at the chart, so different. Where the S&P with the market weighted index has been moving up, the broader equally weighted S&P is really just stuck in what we call a pennant pattern. Now it should break to the upside from this pennant because the trend into the pennant is up. And so my expectation is when the market starts to think that interest rates are going to come down, when the bond market starts to go up, then you will see money move into the broader market. For now, money is all concentrated in those large cap tech stocks. Let's take a look at the NASDAQ 100. Same story. There's the long-term chart in a very strong upward trend. I would argue getting a little overbought because we are moving up and away from the trend line. And so it could have a little pullback in the near term. If we look at the short-term chart, you can see it's just generally, it goes up, it pulls back. That's your buy point. Don't buy up here. Bad idea. When it goes up, you wait for the pullback and buy the break of the pullback. Now the next run, don't want to be buying up here. Want to wait for the next pullback to be a buyer of a strong market. What about the Russell 2000? Now this is where you see the broader market, and much like the equal weighted version of the S&P 500, you can see the broader Russell 2000 ETF, which is symbol IWM, is in this pennant pattern with a trend up into it. And if we get some expectation that interest rates are going to start to come down, then you will see this start to go up, most likely. I'll show you the bond market chart in just a moment so we can get some insight into that. Canadian market has been lagging the US market in general, and you can see this little pullback here comes down to support. We had some strength in gold, which I'm going to show you in just a moment, and that helped the Canadian market because there's a lot of commodity stocks on the Canadian market. It's basically a neutral chart right now. If we look at the short-term version of it, you can see we've had a nice comeback, but we're basically at this resistance level and we started to pull back. So but look here, you go up, you pull back, you break the pullback, next leg up. Now we're in a pullback, wait for the break of the pullback for the next leg up. All right, let's take a look at gold and oil. You can look at silver too. So here's gold. It was up and then it spent about 3 months going sideways and it's starting to break. And so I think gold actually has a good chance to continue higher in the weeks ahead. Let's look at the short-term version of this chart. There you can see what we call a pennant pattern. I can draw a line across the tops. and a line across the bottoms outside of that little island there. And so you've got compressing volatility, which means investors are gaining confidence about what gold is worth. And then it broke from that on Thursday and it moved up into Friday. And it probably will continue to move up in the near term. How about silver? It's going to be a pretty similar chart, but we'll take a look. So here you see silver up, pullback, break of the pullback. That's the weekly chart. And that points to silver likely moving higher. It actually looks like even better than gold. Now USO is one chart that represents oil. And here you can see that volatility is compressing. Okay, so the swings are getting narrower. We've had a little rally in oil the last 4 weeks, and it's now coming up to resistance where it will probably stall and pull back in the near term. So keep an eye on that. I like how oil is building optimism, but it's, still has to deal with this resistance that has to break out from, probably pulls back a little bit and then takes another stab at breaking through resistance. So oil generally good, but gold and silver are looking better as far as commodities go. All right, well, let's take a look at the US dollar, and then we're going to look at Bitcoin, and then finally the bond market. So if we go to the 1 month chart, you can see that the US dollar has generally been strong, but near the end of this week, it started to fall, breaking this little upward trend line. Now that's one of the reasons gold was able to rally, because gold in US dollar terms, even though the price of gold went up, the value of the US dollar went down. So for someone outside of the US, it's not as big a gain in gold in real terms because of the US dollar weakness. And this often happens. There's often that relationship like that. All right, how about Bitcoin? This is one where there is a bit of an issue. So there was a lawsuit with a Bitcoin exchange, Mt. Gox, and that caused, it'll show up a little bit better if I shorten this time frame here. So let's go to the 1 month time frame. And you can see this big gap down on Friday. And that's because all of the Bitcoin that was released to creditors was tradable. And so you just had natural selling pressure. You can imagine someone hasn't been able to sell their Bitcoin because it was locked up in a lawsuit essentially. And now all of a sudden you get to sell it. People are like, wow, great, I'm going to sell. And that's just creates a lot of supply, and that's what caused that gap down. However, don't think for a minute the market didn't anticipate that. Okay, the market always knows what's coming. Most investors may not know, but the big money players in the market know what's coming. And that's why Bitcoin broke its upward trend line and has been trending lower in anticipation of that release of Bitcoin, which would then be sellable. In anticipation of that, it was being sold. And then here's the culmination. Now, some people will say, well, there's bad news there, but it's probably actually going to go up from that because the market tends to buy the rumor, sell the news. In this case, short the rumor, buy the news news being bad. And so you may see Bitcoin bounce back. With that said, I don't see any reason to buy Bitcoin here. You want to wait for it to build a rising bottom and break the downward trend line. So if it can build a rising bottom, break the downward trend line, then maybe it'll make a comeback. Until then, I think you want to be fairly bearish on Bitcoin. Last chart we're going to look at is the bond market. This is TLT, and you can see the downward trend line there was broken 4 weeks ago. We haven't gone anywhere yet. We actually pulled back, but this week we managed to close above the open. That's why that candle is green. We've got the rising bottom. I think it's going to start to move up, start to anticipate a rate drop. Could it be July? Could be, but probably not. Maybe August, September. We'll just have to wait and see what pans out. But the expectation is probably more towards the fall that we'll get a rate drop, but the market will start to price that in before it actually happens. If we look at the short-term chart, you can see there was a big sell-off. There was a big sell-off right here, and then we're making a comeback from being oversold, because if you do a trend line, we fell away from the trend line, we've come back to it. Looks like we're going to get stuck here, but if we can build that rising bottom, we should go back to those levels. I just think it's going to take time, and that's probably the catalyst for strength in the broader market if that happens. Is it going to happen in the summer? Yeah, I don't think so. Could. Don't think so though. But typically we do get a summer rally at some point, and so even though we maybe won't get an interest rate drop this summer, the market will start to price it in before it actually happens, and that could motivate a little bit of buying. All right, so let's just go through my ratings then. Bullish on both time frames for US large cap and NASDAQ, but I want to say quite risky because it's been going up so much. There's no reason to sell except for maybe some names here and there, but the market is getting pretty extended to the upside, and eventually it's going to get a pullback. US small cap and Canadian stocks neutral on both time frames. They're in that sort of narrow range waiting for a break through some resistance. Gold, I've got bullish on both time frames. Oil, short-term bullish, long-term neutral. US dollar neutral on both time frames. Notice I put Bitcoin in the red, and that's the trend is down. We've been red on the short-term trend for a while, and now long-term it is breaking through some support. And so until it can start to build some rising bottoms, I want you to be fairly cautious with Bitcoin holdings, and as a result also some of the Bitcoin miners, which maybe will see their stock price start to come back. Some of them have been performing really well. I think of HUT as an example that has done very well even though Bitcoin has not been moving up, but I'm a little concerned that this could be a catalyst for some profit taking in some of those Bitcoin miners. And then finally, bonds, neutral on both time frames, but certainly could get better. All right, let's look at the trade of the week, and we're going to look at Tesla because I think that is also a great example of how you can swing trade stocks like this. Now, I always look for abnormal activity, and I built an indicator that looks for abnormal activity. So if a stock makes an abnormal price gain with abnormal volume, it gets this little yellow and pink dot. So you can see a few of them here. And the important ones are the ones that break from low volatility. So you had a break from low volatility here. You had a break from low volatility there. And when I say low volatility, what I really mean is sideways trading, boring. And so this was probably the best buy point. That was on June 26th at just over $190 a share. And what is that, 6 or 7 days later, we're hitting 251 here. No reason to sell until that upward trend line gets broken as a swing trade. So if you're in Bitcoin, in Tesla, that's something to watch for. Watch for that short-term breakdown. Probably, if you like the company, be able to buy it back cheaper on a pullback. And if you're in it, hold, but watch for that exit signal. All right, well, hope you've enjoyed this week's video. Love to hear your comments. And if you enjoyed it, hit the like button. It always helps the video get more views, which I appreciate. Subscribe to the channel, but most importantly, trade well.